It's days like this that we live for. One of the things that I continue to talk about is that day and a half rule. Sometimes when you hear Powell and Fed Day speak, as I call it, uh, sometimes the markets just don't know how to digest what's being said. And yesterday, you saw it on Tuesday. You saw where the markets were extremely muted, very quiet, very tired, just serious anticipation of what was going to happen. And something very interesting happened yesterday that I don't think a lot of people were talking about. Out of every single call out there, and yes, it was done in a way that I was a little concerned, but every bank out there except for one said 25 basis points, including myself. JP Morgan was literally the only one that said 50 basis points and was willing to put their name on the line and say that. Um, I've been saying it for a while that the Fed is definitely behind the curve. I don't care what they say. They've even mentioned it several times that, oh, we're not behind the curve. The fact that they have to say that, that means they are behind the curve. And if they weren't behind the curve, then why they do 50 basis points? I say this all the time. Listen to what they do and not listen to what they say. Because quite frankly, they're saying something different. The economy is great, yet we're going to have to cut. You usually cut when the economy isn't great and you're trying to beef it up a little bit. So while there are cracks in the economy, and we saw that, we talked to Michael Litt yesterday. Uh, Going forward here, I think everything's fine now. Look, you're going to whatever the problems are, let the companies solve them. They can solve them, and they are. Their margins will go back up, and we're going to see that. And one of the things I also want to see too is I want to see technology come out and really do the big plays here, and let's move the needle here. And so when I look at that, I had to look at two things. I look at now that we're in the middle of September, you got to think about holiday sales, and you've got to think about the next level of technology. And they're still talking about AI everywhere. It's even bigger now. You saw it with Apple talking about it last week. I don't, they're calling it Apple Intelligence, whatever. But AI now is Strawberry. So there are a lot of things that are keeping us up, and I'm starting to see that now in the markets, and it's starting to show. The problem is that we have a very wishy-washy market, meaning that there are a lot of people out there that are just nervous. They're just not sure. Why? Because the exact opposite of what Donald Trump has been saying. The market is not going to crash if he doesn't become president. We're at all-time highs, getting very close to the election, and it looks like he's going to lose. So without getting political, look, stop thinking political now. Now it's time to get to make sure our portfolios are prepared for a Kamala Harris administration. And now we know that there's some cracks. Let's see that those cracks get filled. And I think we move forward. And look, we're going to see 400 plus points in the Dow and 430 points on the open on the Nasdaq. What kind of day is that, Hondo?
Yeah, amazing. I want to follow up on a few things that you said there and get back to the Fed for a second. Things that I saw interesting there, median dot plot 4.755 end of the year, what you've been saying exactly. So, right in line with what you said, lines us up for 25.25. So, we want to watch on that. Um, he also said that he saw us getting neutral by the middle of 2026 there. So he sort of came out and said that. I thought that was the first time that was bullish for me. So again, I think it was more the way he said stuff, and you brought that up. You said don't just look at the numbers, because the part that I got to ask you a weird one is I noticed yesterday afternoon bond yields ticked up after the talk. They've now gone down, which they should, but there was it. Did he just sweet talking everybody yesterday? I mean, he looked on point lot yesterday. They didn't really get him too crazy, too nervous.
What did I say? Listen to what they do and not listen to what they say. Because what they did was they did a. I mean, look, they only have one big lever. That's one big hatchet, a big hammer, and bam, they swung that hammer yesterday at 50 basis points. I'm gonna say 50 bips. I'm just so used to it now. 50 bips. That when you do that big of a move, there's three things that I've been saying the whole time. Number one is they're behind the curve. They're catching up and they're using this first big hammer swing to get that. The second thing that I've been saying is once they start cutting, they are not going to stop. And the third thing I've been asking for is give me the goalpost, because the goalpost continues to move with the Fed. And guess what? They moved it again, saying neutral rate by somewhere next year. Um, wow,
2 years, 2 years, 2 years,
yeah, 2 years. Sorry,
2026.
I'm
Yeah.
sorry about 2 years. So that's a goalpost. What I'm saying is they might move that goalpost even tighter if they went to 50 bips now. What will they do in the future? And look, they said that their biggest concern was unemployment. They were concerned about job losses.
Still
They were
labor.
concerned, yeah, they were concerned about labor participation too, because quite frankly, people are working 2 and 3 jobs. So that tells me a lot. That's what I'm looking for: is what are they looking at, and what are they actually doing? They can say whatever they want, and trust me, they're going to say a lot tomorrow when the big curtain
Yeah.
comes off and they can start talking again. But let's be real honest. 50 bips in the start is a swing in the hammer.
Yeah, like you said, they did a good job, I felt, of selling off that as being late to the game versus there are huge cracks that we need to fix. Hey, listen, whether we agree with it or not, there are so far retail's agreeing with it. We'll see. I
Sure.
do think we'll see some profit taking this morning. And we had already said it was labor, labor, labor that was going to be what we need to focus on moving forward. Today, initial jobs, the first data came out. That was my first question this morning. I looked at that and said, "Oh, did the rug pull start right away?" But no, it came in lower than expectation. So again, people not doing it, as we've talked about though, and a lot of different analysts that we've seen talk about that, they have definitely brought up that part of that was really based upon people are not leaving jobs. That people are like, hey, I don't know if I can get another job right away, so I'm not necessarily leaving my job. But that's definitely what I think people are going to be hyper focused on. As I would warn people to be careful as payroll numbers do come out over the next few weeks, months. Watching that. There. Bank of England did not lower rates. I saw that overnight. They were the ones to follow. Interesting.
Shocker.
Interesting one though that I saw here was that now China, and there you're seeing Baba move up this morning tremendously. JD Neo, now routers and others predicting that they are going to lower to match the U.S.
Yeah.
We know that opened the door for them. Makes it a little easier for them to make that move. They need that move, as we've talked about. So I did notice that Chinese names had been moving up a little bit on that. Following up too with your interview yesterday with Michael Litt, which was fantastic. It is up on our website and on our YouTube site. Excuse me. He had a lot of talk, and where you've brought it up is watch those earnings, because he sees earnings moving up and there being about a 13% profit margin increase for a lot of these companies. So is that one you're going to be watching now a little bit more closely, or is it one that you always watched?
Yeah, because the cost
Regardless.
to borrow is going to go down, right? I mean, and you you know damn well that no company's going to cut their prices if they can keep them up, right? They're already talking about that. So no, I think if you're looking at those numbers, I think margins are very important, and some of the highest in the country are Apple products. People are getting screwed almost daily on that. I will also say that if you look at it from the perspective of the buyers and sellers in the markets, they're also looking not just at margin but R&D. The cost to borrow will now go down, and so if they start to borrow money in order to up their R&D budgets, I'm really looking at that now. So look at the move in the R&D budgets, especially in biotech technology, like software technology, like is in as in servers, because I think servers are important right now. Quantum computing, so margins are going to get stretched a bit, and they're going to see just how far they can do that with inflation. Now, here's the problem: when you do lower rates and things get exciting again, guess what goes back up?
Inflation.
Inflation. So as inflation starts to creep its ugly head back up, they think they've got that in check by other things. I don't think so. Inflation is just going to be automatic, and as those come up, where is those margins going to go? Are they going to they're going to tighten and squeeze a bit? We're going to see, and we're going to see just and what companies are now going to say, okay, I now feel comfortable. I can borrow. And here's another thing what companies do to borrow money. They'll borrow money to go buy back their stock.
Right.
And look, companies that have already put stock plays in play that were saying, okay, we haven't done all the buying. We 2 years ago said we're going to buy our stock back. Great. We haven't finished that up. You're going to see an acceleration of that, and that's why I think the stock market is not even begun to go up. You saw that, you heard that from Michael a little bit yesterday,
Yes.
talking
Yep.
about, yeah, but I think it's going to be bigger than what even I think Michael's even saying, because quite frankly, you're looking at it from the perspective of a double whammy now. Margins are going to get bigger. Inflation's going to go up. People are going to be a little irritable, but they're still going to buy those products, and then you're going to see stock buyback. So this is a perfect storm to the upside for stocks, even while we're on the high here. And here's something else: whenever you see the markets do this, right? When you see the Fed cut like this and continue to cut, markets on average are up 15% per year over the next 50 years. They've seen that almost every single time. So that is, and I know the last 10 times the Fed cut like this, it's been up every single year. So the chances of you just holding and buying and holding now are pretty high now. And you can just pretty much just stay where you're at.
Yeah, I mean that is it. We talked about it. Is it 1995 again? S&P rose about
God,
50%
I
the
hope
following.
so.
Yeah, it definitely looks like everything's set up. I hate to use that term Goldilocks, but it does look
Ah,
like we have hit it a little bit there. So the other thing I'd bring up is some of the things that still make me nervous that I don't think got fixed yesterday, but it seems to be going away, like you said, inflation. Right now it's not on anybody's mind because gas is cheap, and that seems to be. I can tell you, it just makes me laugh as someone who didn't do a lot of driving, especially when I lived in D.C. I'd take the metro. It was never my big thing. But man, now that I drive, I worry about it like everybody else. Gas WTI almost at 72 here. So you're
and these
seeing,
are normal things in an election season that you talk about: road construction, price of gas, how much it costs to live. Those things have all come down. Now, cocoa and coffee have not, but most things that you buy have come down. The costs of delivery, transportation has also come down. So when you see oil at $70 a barrel now, I know that other countries now are buying for their own strategic reserves.
we did
So
see
that
that.
that's adding a little bit to it. But no, we've talked about this. This is great. We've
Yeah.
talked about this over the last few weeks about the Dow theory, right? For look at FedEx. They're going to be happy campers because you know what? People are still buying at Amazon. People are still buying at Walmart, and they don't really want to go in the store. They want it delivered. They don't want their dog food chewy, right? No matter what how you buy, it's still got to go through some kind of mechanism to get it to your house. So whether that's FedEx or UPS or going through the USPS, all of those things,
Yeah.
it takes gasoline. So
Right.
if gasoline comes home, margins go up, FedEx price goes up, stock goes up.
That's a good segue just for a quick note. FedEx earnings are today after hours. I don't know if you knew that, but that is the case.
Goodness,
Yeah,
actually.
and like you said, that should help. We know, again, we've talked about Target, Walmart all coming into their big, time of the year. Not even, most people might say, well, that's December. No. Target Day is in like 2 weeks, October 5th, and then right after that is Amazon Prime Day. So you see two of the biggest shopping days of the year end up being those days, along with Walmart's will be in that same time frame there. So something to keep an eye on. So rates go down, Steve. Where is the plays that normally come out here? Financial services come straight to mind to me, right? People will be borrowing more. So J.P. Morgan's, your other banks there. One,
Here's what scares me about financial services. Um, they've just lowered how much money that they need to keep in those banks from 19% to now to 9%. And if all these people are coming to the banks and saying, "I need to borrow money to buy a house," oops, there's less money in the bank to borrow. Oops, there's less money in the bank to borrow for cars, a new car, a anything that you want. You want to borrow money for a new business. There's less money in the banks, so you might see a little bit of a crisis of the banks coming up pretty soon. That's an issue to me. We got to shore that up. Where is that cash going to come from? Well, it could be from SBA loans, Could be from the government having to shore up some of the banks. But guess what they usually do? The U.S. government usually floods the banks with cash. So
Right.
get that printer burring, get it going, and guess what happens? Inflation. So it's a circle. I don't, look, that's why I did not like the 50 basis points. I'm excited about the stock market. Don't get me wrong. It makes me happy. But
Absolutely.
it's not good for the economy. It's showing that there are cracks. It's showing that, and we're going to start seeing that down the road. Now, hopefully, as these rates come down and we start to see home buyers, people get into the homes. They clearly said that this is not politically motivated, but good God, this close to the election, and you've heard 3 senators say, "Hey," with a letter to him saying, "Hey, please rate or lower the rates by 75 basis points," and all of a sudden, out of the blue, 2 years now we're going to lower rates by 50 basis. It almost feels political because we've also had a major political candidate say lower the rates. So, wow, we heard that from Michael Litt yesterday, talking about it from Arthur Burns that happened back in the 70s. So, and
Right,
that
right. Although
when inflation got out of
he felt
control.
that Powell's done a pretty good job of playing that off so far. The question is, will he be able to continue to do that? Will he actually be there, or do we see a puppet get put in place, as Michael and you talked about yesterday? I will say economic day today. I do want to let everybody know we do have existing home sales at 10 a.m. and U.S. leading economic indicators at 10 a.m. also. I'll be watching that existing home sales. Again, that's where inflation has been the stickiest, in my opinion, has been in cost of shelter. So, and again, you guys yesterday talked about the fact that that's where the next big burst of money could come from, is if household creation can get moving. So that would be the first sign of that.
For me, the housing numbers may not be so important this time around because it's not going to factor in the new 50 basis
Yeah, it's a
points.
lagging
Uh,
factor.
yeah, it's a lagging factor, so I'm not too concerned about it. Now, I just saw it on CNBC again, and it's one thing we do need to talk about. We have been saying that Apple cut back on their iPhone production, and now we're seeing where T-Mobile's CEO says that pre-orders for the new iPhone 16 are actually up.
Oh, I
So
saw that.
there seems to be a disconnect between Apple, the company, and Apple in the retail stores. So where is that disconnect happening? Are people just not going to the Apple store anymore? Are they going to the T-Mobiles and AT&Ts and Verizon? It's so stocks there should be going up. AT&T, Verizon Wireless, and Sprint. All those companies should actually be pushing up, right? T-Mobile, Sprint.
Right.
So, but if Apple is now saying that orders are down, why?
So
And
I think I
T-Mobile,
have a little bit into that. Is that part of that was China, where they're facing those early estimates were from the Chinese market that we talked about last week, and they face a lot of competition there. They don't, here in the U.S. it's a two-player race. I mean, a few people have the Google Pixel, but it's Samsung or Apple. In
right?
China, you have Huawei and 3 or 4 other makers that are Chinese that get in there. So I think that might have skewed it a little bit. I also think that everybody, all analysts were pointing that sales were going to be low. So when the first number came in, panic set in. I think Apple
Right.
panicked themselves, like you're saying, and it's not there. I also noticed, because my actual contract with T-Mobile is free. I'm free and clear, so to speak, and they are offering a lot of deals to try to keep you on to with the free iPhone. So I think that could be spiking it too, which is great for Apple. That helps Apple. So those could be some of the reasons there on that. I will say some stocks I'm keeping an eye on today. DRI is Darden. They did have their earnings report this morning, and they hit their numbers. But they made it clear that it was slow in July. What they're seeing though, Steve, that surprised me is people coming back. I hadn't really seen that in my area, but people they said strong. Since Labor Day, things are looking good. Their big announcement was a partnership with Uber. For all of you Olive Garden fans out there, you will be able to get your Olive Garden delivered through Uber. So they were moving up nicely in the pre-hour market. So I do want to point that out. Staying in the restaurants, it seems like they report together. You have CBRL, which is Cracker Barrel. they will be announcing today. So those of you that play the earnings games, they would be someone to keep an eye on here. Other ones that I was looking at, cars with interest rates, the rental car companies getting a little bit of a boost here this morning. CAR, which is Avis, Hertz, HTZ. And then with that, you saw a couple of analyst reports come out that sort of reinforced those calls. So that's going to be on my screen. On the other side, we have SCS, which is an office furniture company that had earnings. One of the few people getting dinged here this morning. Steelcase down about 8.93. They missed. So again, earnings are important. They missed estimates, gave lower estimates for next quarter. So they are coming down here about 8%. Those were some of the early movers I was watching. Some other ones for earnings today, RSSS, which is Research Solutions. We have Fact Set Research, which is a play you might not think of as in the AI side, but they are a big data aggregator. They sell a lot of their data. So FDS might be an interesting one to watch today. IPW, which is iPower Inc. If you're on the sort of electric vehicle play, that there. AENT, which is Alliance Entertainment. MLKN, Miller Coal, and then lastly LightPath, LPH, for those of you looking to make the earnings. That's what we have there. On big losers today, talk about, again, business can go the wrong way. Doesn't matter what the economy doing. PGNY, which is Progeny, down about 24% here this morning after announcing they are actually a fertility, and this is one where I think, again, where companies are saving money. They are a fertility care insurance coverage company, and they announced that their largest client, responsible for 12% of their revenue, has told them they will not be using their services moving forward. So that is the big movers in the early part of pre-market so far. Who are you watching today, Steve? I know you always got your eye on NVIDIA. You nailed it again yesterday with them. Are they back on your screen for watching today, or who else are you taking a look at?
You know, I just pulled it up, and you were talking about restaurants again, and we've been saying it. It's Cheesecake Factory, CAKE. I mean, it's up 3.5%. I know the stocks are a lot of stocks are up today, but I've been saying this for a while. Look, people are not. I'm gonna tell you right now. I think some of the companies that are gonna hurt over the next little bit is McDonald's. Look at McDonald's today. A good day should be a good day in the markets. Only up 0.2%. I think McDonald's is done. I think McDonald's comes back down. They're going to have to change out their menus. They're going to have to figure out people aren't going to eat the stuff anymore. We're going to start to see that they're going to have to put more salads. I know they have salads, but instead of French fries, there's going to be apples out there. If they do that, right? You're going to see these fast food restaurants hurt because, quite frankly, there's so many people right now on weight loss drugs that you're seeing that. Now, when talking about the weight loss, and we've been talking for a while, and I've been saying it, like Eli Lilly and Novo Nordisk. Look, Eli Lilly, LLY, that's up 1.24%. It's had a nice run. I get it, right? And you're going to see some competition. But I think eventually everybody's going to be taking a pill, and it's just going to be like taking a vitamin anymore. And there's not going to be any of us overweight anymore, Hondo. Like, we're all going to be like skinny, and it's going to be crazy. And that's moving the needle forward for the world, right? For people, right? And because of that, I think you're going to see fast food getting hurt pretty much, and quality restaurants do very well. I think
I got an interesting one for you there. What I'm noticing as somebody who has a 4-year-old is McDonald's is getting into the trinket business, I would call it.
Get into it. Shoot, I used to have all the Star Wars stuff.
Well, but listen to this one, Steve. Have you ever seen one where they actually sold something? They have these keychains out right now that's like a partnership, maybe with Crocs, because they look like Crocs. I mean, my LMA has 2 of them already, and can't wait for the next ones to come out. But they're actually just to pay for $2 each. So that's the first time I've ever seen that. So interesting you say that. And I agree with you that they're under fire. I more think they're under fire because they raised prices too far, and people like me that looked at it and said, you want $12 for a not very good burger that, you like you said, has a ton of trans fat and everything else, I can go to Shake Shack down the street, which is a much better burger for
Correct.
the
That's what I'm
same
saying.
exact price. So so I think that they're going to get stuck in the subway circular economy, as
Well,
I would
I,
call it, where you got to sell everything at $4.99.
I have to ask the question. I mean, when you look at, you just said it yourself, they're selling these $2 things and it looks like Crocs. You've just put two name brands together, McDonald's and Crocs, right? So when you look at those connections, to me, it's always about, does it have a movie behind it? And I think in the last one, we want been seeing the Transformers one has been pretty popular with kids. It's coming out. Um, Hasbro, HAS,
Right.
right? That's a stock that's got both Barbie and all kinds and games and all kinds of things. They'll probably have to partner up again with these companies like McDonald's and Wendy's, and to get people to get kids back into it. I'm also seeing a lot of McDonald's put a lot more playgrounds into their system, and I've also seen more changes in the McDonald's for the seating, right? And how you interact. It's now you walk in with your cell phone, you already have an order, they bring it to your. These are little things that these companies are going to have to do because it is not about the food anymore. People aren't going to be eating it. Why do I say it? It's not because the food's terrible or bad. I'm not saying that. It's because people are eating less, right? When
Right.
you're on these
Absolutely.
shots, they don't eat, and they don't need that fast food anymore to get them through the day because they're on the shot. So that's what I mean by that. And when they get to the end of the day and they want that, they I didn't spend any money at McDonald's, or I didn't have a Starbucks coffee this morning. I've got an extra $12 in my pocket. I don't think I'll spend it on a much better steak or a much better menu at a nicer restaurant in the day, and that's what they're doing, right? I'm already finding myself. I'm on myself, and I'm spending less money at the restaurants because I'm not ordering appetizers, and I'm having one iced tea. Those kind of little things will also affect the margins of these
Absolutely.
restaurants too. And I think what these restaurants will do, rates go down, they can buy higher quality meats, buy higher quality food, and be able to have a much better presentation. I'm already seeing that at some of the restaurants saying, hey, we have a new menu. Look for that. That's one of the keys to knowing how a restaurant's doing. If they have new menus, they got old menus because they're having to use their old menu, right?
Right.
Look for new menus. And we saw this during COVID, right? Right after COVID, they had to make their, let's say, their offerings a lot smaller, and they had
Absolutely.
to not have as much out there. Now they're starting to expand that and more quality. So yeah, I see that quite heavily.
Well, as you know, I'm heavily involved in the restaurant industry.
Yeah.
Opened a bunch of restaurants over the year, and I did just recently opened one here in north of Cincinnati. And I will tell you that there's a few different changes that are going to change how what you're going to want to look at for restaurant stocks and things like that. Like you said, who's still spending money and doing good things, who's discounting too much. Discounting is always a bad sign in the restaurant business because you never get out of it. Once you give people a discount, it's a half price burger night on Monday, you don't get out of those things. So it will be interesting to see there if that happens. The other thing that you brought up there was those retention programs they're doing. As I catch myself now, I was never one of those people that had the apps for those restaurants and all that stuff. You have to. They're offering too good of deals not to. And I'm not talking, McDonald's. I'm talking Ruth Chris. I'm talking Capitol Grill. I'm talking, some of the best steakhouses, some of the best restaurants in the country. If you're not on their email, list, if you're not on their app, you are missing out on, 5, 10%, 15% savings. People are spending, restaurants are willing to spend 10,
Right.
15% to get that loyalty. So it's definitely going to be a change to keep an eye on. Hey, one I want to point out, Steve, we're close to open before we get into the frenzy. MBLY, we've been talking it up here
No lie.
again for a week. Intel came out, said we are not selling our shares. They are the number one shareholder in the company, up another 11%. We started watching that thing when it was, down around 10.20, now up at 12.89 here. So one that we've definitely
And
kept our
you
eyes
know
on.
what? Two stocks aren't moving: GameStop and AMC. All right,
That's good to
market's
see.
open right now. We're
Here
seeing
we
a push
go.
through.
Let's
Yeah,
see what we got. What's our tick look like on open, Steve?
right now we're tick sitting here about. Oh wow, look at that! Just jumpy there, up to 300, 500. Wow, it's really jumpy. You know what? I think you're going to see a lot of profit taking though right now. Though
I
that's
would
what I'm.
assume so. And especially as we know at the institutional level, those folks
Yeah,
have a good tendency to do that. VIX 1643, right back where it was. So, again, you know, anybody that made that play, when we were
Nvidia
telling you
now up
1650,
4%.
yeah, everything.
Yeah, there's a little bit of profit taking now. I had a feeling that was going to hit. So
Again, Chinese stocks, JD up 5.5% here, moving up in there. Neo up 3.59%. So we're seeing a lot of love to the Chinese stocks as the expectation we spoke about earlier that they will be cutting also. Apple up 2% here. Another one I want to point out is a play there for the lower interest rates, AFRM. Um,
affirmed. Yeah,
yeah, buy now, pay later. I'm not a big fan of the concept, but
right.
they are ones that tend to do well when interest rates get dropped. Although they're moving in the wrong direction here as we speak here on the 3
I'll
minutes.
tell you what
But
I did yesterday. I bought, and I thought it was undervalued, is Ethereum. You know, when
I
you
know you
look at
did.
Bitcoin to Ethereum, I bought a lot of Ethereum. I took the profit that I took off last week on crypto on Bitcoin. I put it right into Ethereum because I thought it was the most undervalued, and you saw where J.P. Morgan said that Ethereum is the most undervalued crypto out there. So wait, what?
Yeah, it's definitely not getting any love right now, and that's just cyclical. I'm with you there. As you know, I was advising one of our friends yesterday that was looking to get out of Ethereum to actually lend it out instead of selling out of it to, he wants to buy some Bitcoin. That's sort of a play on like the yen carry trade. If you think that Ethereum is going to perform Bitcoin, you can do some different things in the markets there. Seeing some little weakness click across here.
Yeah, it's kind of what I figured. We'd see a little bit of it selling, but my God, Dow's now at 540 points.
Yeah, you can't complain there.
And silver at 31
Interesting.
dollars.
Walmart. I haven't seen any Walmart news today, but they're one of the ones that are down.
CrowdStrike's up almost 4% here.
Yeah, CrowdStrike moving.
Alibaba's up 3.5%.
Yeah, the Chinese ones are sky. JD's up over 5 now.
ARM is up almost 6% here.
You do straggling, trailing the other Chinese stocks in that sector. Intel up
And
another 2 points here.
and my favorite Solana is up 5.2%. So man, buying Solana at $9 and now looking at it after I don't own it now, but now looking at it at 141, I want to shoot myself a little bit.
Yeah, I don't get mad. So as you know, Solana, even Luna before the implosion were ones that I called very early in their life cycles, and we did real well. So I don't ever, as you say, you can't look back and get mad for selling too quick as if it was
No.
at a good profit.
There's some of the profit taking now that we kind of expected. Let's see that, but yeah, tick down 200 now. So you're starting to see a little bit of the spot gold dropping 25.76 now an ounce.
Steve, I got one for you. You talk about the taxi cab driver a lot. That you take some things there. I'm going to use the mother-in-law indicator.
Yeah, sure.
So what I wonder and what will be interesting to see is, as we talked about over the last few days, and you guys really talked about, you and Michael yesterday, is how high money markets and CDs are, how much money is in
Yeah.
there right now, and how hard it is for some brokers were saying how hard it was to convince their clients that it's time to move out of those and get back into stocks if they've weighted them differently. I think there's a change. I think that 50 basis points. Mother-in-law called me today and said, "Hey, I've been using CDs. I've been doing this, blah blah blah. I have something expiring this week. Can you sit with me because I think it's probably time. Should I be looking somewhere else?" So I thought it was a great sign of maybe you will see that move that you guys were hoping to see. So I actually was going to follow up with Michael today to tell him that I'm using my mother-in-law indicator to say what he was hoping was happening.
So the question,
Hopefully
the
it
question
is.
isn't the question isn't was she asking. The question was she actually going to do it? Was she going to
She
move
is.
money?
She
Then
like I
there's your
said,
answer.
she
Yeah.
she yeah she was saying it should she was asking me. She said normally I would run right back to the bank and just up into another 6 month, CD here. But I saw what happened yesterday. I listened to you, you and that guy Steve talk. And should I be looking at these indices? And she even pulled out the Russell 2000 at me, so she's definitely been watching. So
Well, hi, Mom.
yeah.
Yeah.
So I said, yeah. I said you nailed it. That's where personally for me, I think there's some of those values. She's not a lady that's going to do individual stocks. So looking at the RUT, the RUI, some of these, for me, I also talked up some of the dividend plays. I know you, I talked her up, said I would follow up with you on that because you're there. Are you thinking the sectors in the dividend, financial services, REITs, real estate? Are those the ones
Yeah,
you're looking at?
you took the word out of my mouth. I think REITs right now are important. You can see right now the ticker O, which is one
Yeah.
of my favorites. Because why is Realty Income my favorite? Because Realty Income is the place where you hide money when you need to, because they own the businesses, the land of which the McDonald's and those kind of companies sit on in these places. So um, 61.47 right now, down 1.5%,
Yeah, today could give you.
1.15%.
Listen, we didn't talk about this one. I sort of surprised you, like I said, on the mother-in-law factor there. But this is one that could come
I
back to an
like that
attractive
field.
place here at this 60-22 to me. I might have to give her a call later.
Yeah, I mean,
And
right now that dividend yield there is sporting 5.08%, which is now better than the market CD rate, and you get an opportunity to make some money on it, right? And
yeah,
it's, I mean, we don't tell anybody what to buy or sell here,
right.
and I don't say if it's a good buy or not, but to me, it's a little more safer than some of the other REITs that are out there that we could buy.
Is
And I,
there an
and I
ETF on REITs that I can look at? And I don't
oh,
mean to
there's
bring.
tons of them.
Okay,
Yeah,
I
you
didn't
can
want
go.
to
Yeah.
put you on the spot there. I've never asked you that. We've never talked about it. I don't usually try to
No,
bring
there's several
brand new
of them.
things. Okay, I'm going to
You
take a
know,
look at that
yeah.
myself, making a note. ETF on the REITs. So that's one you might want to look at for those of you that are looking for cyclically to get out of some of these tech stocks that maybe you feel are overblown. Look at those value stocks. Just trying to see here. Baba
And
now
I'll
at
tell you.
3.3%. Wow.
I'll tell you another place that I do look when you're looking at dividend stocks. I look at HYG. HYG is high yield corporate yields a 5, and that's sporting a roughly 5.9 to 6%. Darden, we're just talking about Darden says that their quarterly sales are slipping on July slowdown, right? It just
Yeah.
came out. Look, we've been talking about it, that restaurants are going to start to slow down if they don't get it in gear. So yeah, um, but if you're looking
So
for something like that, yes, HYG is on a
HYG.
high here,
Okay.
but I also think that I don't think this is going to affect the high yield bond market. Well, what does this mean? High yield bond market is when it's harder to get attractive to money to come into that position, meaning that they have to raise their rates a little bit to get you to invest in that, because it's more attractive to buy Apple stock than it is to buy a high yield corporate junk bond, shall we say.
Right.
So what they do is they you just asking for that ETF, so they put all those junk bonds into one. So if one junk bond fails, then okay,
The others are
but
still
they're
supported up.
still, yeah, it's supported. So, but almost sporting is 6%, and you have a chance to make some money on the back end. And it seems to be, if you look at a 52-week range, yeah, it's on the highs, right, and hitting a high today. But sporting is almost a 6% dividend. That's pretty good. I believe it's also monthly too, if you're looking for monthly returns as well.
Nice. Got to bring up the U.S. market movers here that come up on Quasar Market. First one out of the box, TBIO, a biotech up 212% here this morning. Seeing 19 million in volume already. They normally see a million in volume. SGN. Sweet Green. Talk about restaurants.
Yeah, it's again, there's Sweet Green is the nice, when you look at perspective, it's going to also equate into grocery stores as well. So when you have high quality restaurants, they're going to pull from the Whole Foods, and they're going to pull from the Sweet Greens, and they're not going to shop at these low value grocery stores. So I tell you who's probably going to hurt here, and we don't have it in our own country here, but that's Aldi's. Those
We have
kind of
Aldi.
places. Yeah, we have it, but no, it's not
Not
trading.
nearly as much as in Europe, right? They're European. I love Aldi. I'm a big fan of Aldi. Um,
But I'll tell you another stock that looks to be pretty good right now, and I'm liking it a lot, is Dollar Tree, DLTR.
they have made a big recovery after gapping down tremendously back there. Here it is on September 4th when they had bad earnings. They took a nosedive, and it was funny because if you remember, they took a nosedive early when DG Dollar General got hit
Yeah,
because they're so closely related. But they have definitely come back, and I'm with
and
you there.
there are two gaps that can be filled in there with Dollar Tree, and Dollar Tree does very well when the economy is really bad. So the Fed's telling you that they're cruxing the economy. Yeah. So uh,
I'll
look,
give you
here's what.
another reason for that too. Is I live in middle of farmland, as you know. Our Rite Aid closed because all Rite Aids are closing. You know what? You know what's left in town to go buy that stuff at if you're gonna buy like your lotions? DG and Dollar Tree. So you don't think about that in the big cities, but out here in Middle America,
But I mean,
that's a
I
thing.
get that. But what about Amazon? Are you not buying it through Amazon?
I do. I mean, it doesn't affect me, but I'm talking about that. No, you know what? They don't. These are people that go to the store still. They're not technologically, they don't like technology out here. I'm not going to lie in farmland. No, they go. They go to the store. They don't. Because I get into arguments on Facebook with the local community because they hate Speedway. Because they refuse to count the Speedway if you have their rewards. You get 7 cents off a gallon of gas. They refuse to take that into account, and they
But
rail
don't
on Speedway because it's 6 cents more than the BP. And I'm sitting here going, it's $1, it's a cent less. What are you talking about? So
But
no, these
what
people.
about the Sam's Clubs? I mean, Sam's Clubs
Sam's does
has
well. Yeah, I'm a big fan. That big play right now. Sam's Club. The big box stores are where people are going. Steve, I'm seeing it out here. Yeah,
yeah,
Walmart's a big winner from that. It's just I'm
yeah.
just giving you another reason why I would be looking at Dollar Tree and Dollar General was that some of that Rite Aid business is going to move there, and that was a big business. There was thousands and thousands of Rite
And
Aids.
we have a hybrid now, so I don't go to the gas station as often anymore.
Right.
I
Yeah.
think I've been to the gas station twice since owning the car, and that's only because I made some longer trips in a hybrid. But when I went to Sam's Club because we shopped there for a little bit, and I was we'll just top up the gas. We already still had a half a tank, and having to pull out my Sam's Club card and make it go in first and then put my credit card in, it was a mess. I was like, this is silly. It took me longer than.
They make it too hard because I can tell you here there's Myers, which I'm a big fan of, which is a grocery store chain that does similar stuff. They make it so easy for you. You just literally, the same number that you use to do your card to pay your, when you go into the grocery
Right.
store, you hit it. It takes 3 seconds and it goes. I'm with you. My wife has Sam. She sent me there, and I'm like, I'm not doing that again.
So
I
we're
felt like I
thinking
needed a physics degree to figure out what I was supposed to do. I had to use QR
more
codes.
more profit taking here a little bit. I had a feeling that was going to happen coming into this. Yeah,
Yeah, and like you said, I'm going to use your line. I ain't scared. We
I
called it.
scared.
You called it. There was going to be some takeaways. The one that's interesting for me again, we talked about it yesterday. Gold. You look at that daily chart, still moving up here. Um,
I listen. I'm thinking about taking profit on my silver. I mean, you and I were buying it. I was buying silver at around 17, 18, $19 an ounce. We're at 31 now. Look, I'm still calling for a $50 an ounce silver, but the time that it takes to get there may not be as much where I could put that money to good use somewhere else. Now I have my own stash of gold and silver that I
I
don't
know.
that physical, but I'll never touch in case the world does go to hell in a handbasket. But you know, look, the truth of the matter is that you know when you're looking at the interactions of golds and precious metals to the stock market itself, there is a correlation, right? Money comes out of precious metals, goes in the stock market back to precious metals, or the same thing with bonds, right? You're not seeing that. You're seeing everything getting bought up right now. Why? Because there's so much money on the sidelines. I've been talking about sideline money for so long, money market money. I've been on the sidelines for so long that people are getting excited like your mother-in-law. I'll tell you what's even more exciting about that is that when that money comes out of the money markets and comes back into that's when it gets taxed. And taxes help the government, so that might help pay off some of that's what the government's thinking, right? Lower the interest rates for two reasons, right? Number one is servicing the debt of the nation's debt is just ridiculous right now. I mean, we've just passed
It's our
trillion
number
dollars.
one expense. It's the government's number one expense.
Can you
It's
believe that we're now paying $1 trillion a year just to actually service the debt of the United States?
Could
That's just
you? I think that's where a lot of people don't understand. Will you explain how that works using the treasuries? And because in my mind, I've also had like the mother-in-law say, so can Chinese banks recall our loans?
yeah, they're doing it now. I
Right,
mean, that's what they've been doing. Okay, so all right, so we can go it's history time, right?
yeah,
So it's very simple. The United States government issues debt, right? They say, okay, and does it at in a big building in DC, and they said, okay, there are three types of people that can buy this debt. They're what they call directs, and those are the people who buy it in big bulk. Guess who that is direct? That's United States citizens. We buy it through our Social Security, we buy it through pay tax. Okay. Then there's a second one called indirects, which is the JP Morgan's, Goldman Sachs. And then they buy debt, they buy US Treasuries, 10 years or whatever, and they take that indirects and then they resell it to the American people. So you can buy that debt of the United States government through your IBKR, through your brokerage. And then there's another one that issues debt another way, and it's very, very small. Why do they do that? So that the government can continue to function and live, right? So we buy the debt. They say, okay, we're going to pay you. How long did you want that debt for? 3 months or 30 years? You decide how long, and they'll pay a percentage. And that's what we call the yield curve. The yield curve. So normally the yield curve goes this way because on a longer term, then you should get paid a little bit more to keep
right,
that in there. But right now, when we say an inverted yield curve, it means because the 3 month and the 2 year is higher than the 10 year and 30 year. Shouldn't be that way. It should be a curve, right? Curving
right,
up, sloping up. Then what happens is over time, then they pay you out, and then you get money back, and then you can either a lot of will do this. They'll just continue to spin it up, and they'll just say, okay, leave it in there, and you got more money, and then they buy more debt. We're seeing more selling here. I had a feeling that was going to happen in the crypto space. But when you look at debt in perspective, it used to be an easy place to buy it. And then of course you have savings bonds, and you've got I bonds, and that it's or and of course there are derivatives of bonds, meaning that there are other plays and they package them up and they make them. And then there's corporate bonds
right.
for companies. AT&T has bonds, and there's muni bonds. Muni bonds are municipal bonds for smaller places like firefighters and going to small town USA. They need to raise money for an airport, or they need to raise money for something, and those are called munis. And then of course there is debt for what we call CMB. CMBS is for commercial collateralized loans for homes and things like that. Think of Fannie Mae, Jenny Mae for government loans, and Sally Mae for student loans. And then they start packaging them up. That's what happened in '08, right? We started putting good loans with bad loans, and boom, the whole thing blew up. So let's not do that again. And they're already doing that, by the way. So I think that there are safer ways. But when you're talking about debt, I'm happy to explain the bond market. Because why? Because bond market traders are the smartest traders in the world. Why? Because they have to understand every part of the market, and not just what a stock does or what a company does. They have to understand more of a macro geopolitical sphere of things. So when you're looking at, okay, we're seeing Bitcoin now 62.8 now. When you're looking at, and I said there it is, there's silver now below 31. I had a feeling that silver was going to slip. That was kind of what I was thinking here. Look, we are starting to tap some of the tops here in the stock market. Um, if you see another 50 basis points, 50 bips hitting here, say come November, ouch, because they are way behind the curve. I don't think that's going to happen. I think you're going to see the 25 and 25 all the way out. If you see an intermeeting cut,
Right.
that's when I'm going to get really nervous, and I'm going to start to wonder what was going on, what were the here's what's interesting. This is the first time in a meeting that we actually had dissension in the ranks. One of the members of the Fed said no and said 25. The rest said 50.
Right.
Um, why did that one person? We don't need 25. We don't need 50. That's what they said, right? So normally everybody's together. Powell has them all in line, and this we're all going to do this together. And this is you may disagree with me, but he had them in line. And this time there's starting to be a little bit of break in ranks now. So yeah, I I think you're gonna. I mean, nothing's changing here, right? Hal had a nice run, and there's been some serious profit taking here, and it's okay. I believe in profit taking. Everybody knows that, and I expect you to take profit. But I think that people are starting to wake up and realize, what, why 50, not 25? So, yeah,
Definitely seeing a little weakening here.
yeah, I've said it several times. This is take your money and run.
Yeah, you have to. I see IBM's gone negative here. Smucker's Jam's gone negative. Coors. So we're seeing it a bunch across a bunch of different
And oil is about to
areas.
go back below $70 a
And now
barrel again.
VIX is moving back up a little bit, 1674. It's still down 8% for the day, but
Well,
it's
we are going back. We're about to see the home sales coming out here, and they're expecting down 1.3%. Again, I don't think it's a lagging indicator. I don't think it's going to be indicative of what's happening. Wow, we really are taking some lumps here in Bitcoin. We did a round tripper here already this morning.
yeah. China still holding up though. PDD, Neo.
Apple now up 2.8%.
Darden now up 7.45. So as people digest that, and I will say that Uber news is big. You know, again, if you live in the city, you don't want to go driving out to an Olive Garden. It's getting it delivered
Yeah,
is
but what are
way
you going to do when you get hungry and you want more salad and you want more soup? You're going to just have to go
yeah,
back
you
and
don't
pick
get
it up.
they don't bring it back. Yeah, how do they work that out? Steve's mad. MBLY now up 14% here this morning. Man, we definitely called that one out. Look at that sucker go. Wow. Microsoft up 1.58. We know that they increased their dividend yesterday or 2 days ago now. They're moving up.
And you know what? I'm not seeing heavy volume in this selling, which means to me this is straight up options, just shorts. And I think those options will cover by the end of the day. So I think what you'll see, yeah, um, I do like the upside on some of this now from here.
Yeah, seeing buyers step in. Bitcoin buyers are stepping in at that 62.5 level. They got back in, back up to 62.750 here. So we're seeing some buyers. FedEx up 1.82%. Again, goes into earnings this evening. Wow, JD now up 5.35%. Let's see what the bigger decliners are here from my
I'm gonna
Quasar
say
app.
right now, if you see these home sales coming in less than that, the minus 1.3%, we could see run right back up. There you go. There's that's what I'm saying. This it's zero DTEs that we're selling. There was no heavy volume, so I wasn't concerned about that one.
Seeing a big loser today. I'm not going to try to say that first name, but HAO is the ticker. Hagzoi Health Technology down 76%. Trying to see what that news is for you here. Well, they're returning to the capital market 6 months after their IPO to ask for more money, so that's not usually a good sign. Who else? PGNY we talked about already before.
Yeah, but look at it. Why are they going back to capital markets?
Because
Because
you can.
rates are cheap. That's
Yeah,
right.
you can.
There you go. See, I'm saying that's what I said. I wouldn't be worried about that sell off here. The profit taking is pretty much done. Right back up. It looks like we're going back up. Yeah, there goes the Nvidia right back on up 4.5% again. Yeah, Bitcoin's up 1.85 on the session. Ethereum's up 2.3. That's what I was saying. Ethereum is more oversold than Bitcoin was, and so that's why I invested into Ethereum pretty heavy. There you go. Look at that. Back to 63,000 back there on Bitcoin. There you go.
You obviously didn't see Vitalik's video yesterday of him singing at a conference because you would have sold all
Yeah,
of
I
your
don't really.
Ethereum.
I don't.
I'm joking. Yeah, I got it sent to me by Charlie Moon. He was at some conference. The man thinks he can do karaoke or something, and he does it like regularly. And he
Yeah,
might be the.
listen. If anybody do karaoke, that I got that covered. I think.
There you go. I cannot. Yeah, that's what I said to Charlie. I said he seems to be the Vitalik seems to be the only person with less rhythm than me.
When you have that much money, it doesn't matter if you
Yeah.
can sing or not. Yeah.
Salesforce up 3% here. Crowd, like you called earlier, 3.49%. So we are seeing some winners.
I think the profit taking is done here. Palantir's up another 1.17% again today. Um,
Yeah, that I mean, we talked about that when they entered the S&P. It was going to open people's eyes to how good of an actual company they are and how important they are to the security of the country. And now that they're getting into the retail space and having success in enterprise business, they're going to keep going. The other one is Oracle, huh? I mean, that one just keeps climbing too. Another company that sort of reinvented itself. Only up half a point today, but they've been moving up in general. Still at 165. They did hit a high of 173.99 after earnings. Did make Larry Ellison the second richest man again. I feel so bad for Jeff Bezos. He's only number 3.
well, Larry and his boats,
His islands called
his
Hawaii.
islands. Yeah. Well, Jeff's right behind him. I mean, he's got his own island.
Oh,
Mark,
I know. Yeah,
and Mark Zuckerberg owns more of Hawaii than anybody. So.
Yeah, it's crazy. AMD getting a nice run here, up 4.12%. One of the ones you've mentioned this week to keep an eye on in the semiconductor race.
GameStop's flying up 0.14%. Look, the money is that game is over there. We've been talking about. There you go. There's that pop there we need back in Bitcoin.
Well, what it is too is a lot of that's gone into these micro pumpers that I keep bringing up every morning. Unfortunately, that we look at. I just brought up that SGN was up 100 and something percent. Now it's up 298. So unfortunately,
I will tell you this
Street
much. Look,
world's gone.
think of this one. Because rates are lower, the cost to borrow is cheaper. So big companies are going to borrow big money to buy companies.
Oh, okay.
Well, no, they're going to start buying. So I think you're going to see massive M&A coming out pretty soon. And you're already seeing it. Lena Khan, Gensler, these guys are all going to be gone. It doesn't matter what the administration is next. So I think you're going to see a massive move in the M&A over the next 2 years.
And we've heard more and more talk about that. And again, it's going to happen on a couple of fronts where companies are going to acquire other companies that are strong in AI that already had a strong start, to get their offerings, more complete. So we're definitely going to see that too.
And I don't see any stopping here in the crypto space here. I'll tell you something else that happened yesterday that was probably the biggest news. A former president of the United States went to a bar who doesn't drink and bought and he actually paid, which shocks me to begin with, but paid in crypto.
Yeah, you nailed it. I guess,
At least he paid. That's unusual.
Yeah, number one, he paid. And no, it is a big deal. Again, excuse me, if you had said to me 2 years ago, 3 years ago that, a president's going to buy a burger with Bitcoin and it's going to be on TV, I would have said you're crazy. So, so that is a big deal. I think what's bigger is that it's like almost normalized. Like it wasn't a big deal.
Normalized, right?
It wasn't a big deal. So I guess that was the bigger takeaway for me.
And I'm going to be in New York next week, and I'm going to go visit that
Are you gonna
place.
go to the bar?
It's in the Greenwich Village, which I love Greenwich Village.
They have good burgers, supposedly
used to
excellent.
live there. And I'll tell you, I'm gonna go buy a burger because I could buy in Bitcoin. Now, do I want to stack my Sats and give them my Bitcoin? Probably not, but I am anyway. So, look, I get it. The normalization of crypto has now come in, and now you're seeing Gensler screaming about some another crypto thing this morning, and no one's it's all ignoring him at this point, right? So yeah,
Yeah, I mean, at this point, he's a lame duck, So I think that his effectiveness is worn off a little bit here, and I think people just, like you said, people are sick of it. Go after the actual criminals, these guys that are stealing people's
100%
cryptos,
couldn't agree with that
these
more.
people that are breaking into the protocols and stealing money. That's where they should be worried about.
All right, well, it's 10 o'clock, Howard, and the housing numbers just came out, and leading indicators just came out too as well. Leading indicators, month over month, actual down 0.2%. Forecast was minus 0.3%. That's a positive. Existing home sales coming in at 3.86 million. Forecast was 3.9 million. Previous year was 3.95 million. So the actual change was down 2.5%. We expected down 1.27%. So I think somebody saw those housing numbers coming in and realizing, hey, sales of homes aren't happening, and new homes especially. So I think that's why you saw this 50 basis points as
Right.
opposed to the 25.
And you did say that that was going to be a lagging factor, so not to get too nervous. Market
100%
doesn't seem to be too spooked by it here. We are
No.
moving up as we sign off here. So thank you so much, Stephen Orr. I appreciate all the help and insight this morning for Howard, for Stephen. Quasar Markets Live. We will see you at 11:30 with Jeremy Vreeland and Matthew Tuttle doing their market watch list. Always a great one. They called out Snap and a few others that performed really well. And then I will be back at 1:30 for my afternoon update and see what we got going into the afternoon. Thank you so much for joining us, and we will see you next time.